Good afternoon, ladies and gentlemen. This is Clueless Trading Frank, approximately 12:54 p.m. on a massive reversal day here on the markets. Markets opened down, I believe, close to 200 points. The futures were looking extremely ugly. Just as a reminder for all who have been with us for the last 2 years plus, these are the days that the most profitable trades are done. Fear should be a motivator to make serious profits, period. So at this point, what you're seeing behind you is a development of a massive, I would consider that to be massive, hammer reversal right there on the daily. Now, this is not a 15 minutes, 1 hour, 4 hour chart. This is a daily chart showing you a massive hammer reversal. This is where the acceleration phase really goes. Every single alert that's been posted from point 1, i.e. 9:30 a.m. and pre-market is coming to fruition. If through all this, my members and free trial subscribers still cannot make money, then I have no comments. Please watch this. I'm going to leave this on for the next 20-25 minutes. You can see what happens in the reality of algo HFT, algorithmic high-frequency trading, black box movements. This is not emotional trading. You want emotions? Go talk to your partners, your wives, your husbands, your girlfriends, whoever they are. You want real profits? You want to do the right thing for yourself and your family? Follow through the trading charts, and you see what's happening in real time. That hammer reversal itself is more than 160 to 170% on the intraday SPX 2340 autos. End of story. Just keep watching that. It's time for mental calibration. Sign up for the advanced coaching sessions. Sign up for private lessons. Whatever you need to do. I'll spend the time and energy away from my family to help people change their behavioral tendency, i.e. bad habits. Keep watching.
So you don't need a comfort phone. Oh, what about my motivational mirror? In that channel, take a swim, home, TV nurture. Not half-time report with Scott Walker. It's the place for market movie interviews. This is a sentence on it. Lead markets rather than politics. Real money. Everybody is looking for 3% on the 10-year. I believe that's going to happen this year. But first, the market is not any longer climbing a wall of worry. It's skipping along a little slope with great optimism. The most profitable hour of their trading day. Business is passionate. Business can never be emotional. It's not half-time reports. Weekdays at noon Eastern. All right, we're closing in about 3 hours. Let's do some final trades. Joe, you go first. So the financials, I think Josh has done a good job pointing out that it's not just about banks, it's not just about regional banks, it's about exchanges, it's about insurance companies, and Allstate is one of those things. I like to hear at $80. Continued strong fundamentals, technical liquidity. Josh, you like that call? Yeah, I do. I think Allstate's one of the better that two charts in the group. And I'll point out regional banks. So in the first block of today's show, we were told there were lots of ways. That looks like it might represent the bottom. Actually, regional banks got down to 28 RSI only alert. I like Kevin, but I think if you're looking at the time to it sold them, would have been when they made a new high in price about a week and a half ago. Plus momentum, RSI had a negative divergence, could not confirm that high. If you wanted to sell, I don't think you sell here as oversold as that after the big drop. And in fact, they're filling the opening gap if you want to look at an intraday chart. So it's interesting to see if they go green and this that kind of commentary would make that'd be fun. You think I was just going to let that slide? I'm just saying, price is good. I don't control the C's and the stars. This is what's going on. We like the debate. Really? Listen, we're making it really simple. Stocks, long stocks here. I said this at the top of the show that I bet the S&P 500 is green by the end of the day, possibly even by the end of the show. We're almost there, and the reason why is quite simple. People are worried about missing out on the rally. People who missed out on the rally over the last 3 months. All right, so one thing that is there, why not pick an individual name within that group that you think is going to help better? Well, look at all. I mean, we can like them all. I do like them. That's 500. Look, I'm making it simple for everyone, okay? Oh, it happened to be down in the farmer's weekend, Jenny, but that's a different play. I did mine. I shot my whole wad here, okay? And you might find for you. Thank you. I
prices have not been under this kind of pressure since I was driving a Pontiac Fiero. I can tell you right now, credit's tightening, car prices coming off, big issues at CarMax.
Okay, so I'm not one CarMax, all right? Well, I mean, you've made the argument before, you don't buy markets, you buy stocks.
That's absolutely true. And
Now you're telling me to buy the whole thing.
what I'm really trying to point out is all the hand-wringing from last week about this failed Obamacare bill was much ado about nothing, just like Brexit, just like the election. We snap right back.
Okay. Do you realize how monumental it is that we see the time to that never happened? Okay, that's great. Infrastructure plays that are, as we sort of talk about other stocks that are on the move. Lower today. U.S. Steel is down nearly 4, Cat, Fluor, Vulcan. We need to kind of reassess some of the specific names that have moved because of expectations of the Trump agenda.
Yeah, absolutely. I think everything's at risk at this point. I think you got to push the multiple a little bit. I think people got way ahead of themselves, and this is a little bit of a wake-up call.
Agree? Disagree? We've got 20 seconds left. Watch the Russell. The Russell's going to be key.
I agree with what you just said. Look, commodities got way ahead of themselves. There's all this projection that iron ore prices are going higher. No, they're not. The demand isn't there, even with the Trump trade.
That's good stuff. We'll pick up with all of you tomorrow. Bad jokes included. Thanks to the Inliner and the rest. Power starts now.
Question of the day. Will 8 be enough? Today is the 8th straight day for a Dow drop. That is the longest down streak in 6 years. As everybody tries to figure out what is next for President Trump and Congress. Could it be a big bet on big league tax reform? With healthcare and rearview mirror, our taxes the next battleground here live in D.C. And later, up in arms over leggings, the big outrage today involving an airline, a dress code, and Twitter. Because Melissa, all outrages today have to involve social media. I'm Brian Sullivan. Power Left starts right now.
Monday on Monopoly stocks significantly trending earlier losses. Dow was down about 184 points at session lows. We've more than halved those losses. The Nasdaq has turned positive thanks to strength in biotech. Names like Celgene and Regeneron. Financials, though, the worst performing sector right now. The XLF is down by a little bit more than 0.5%. We'll have much more on the bank sell-off straight ahead.
All right, Melissa, here's what else is happening at this hour. Some news you heard exclusively here on CNBC in the last hour. Sources telling us that Janus Capital Group's board has settled its lawsuit against its former employer, PIMCO, between $75 and $100 million. Sources telling us the number around $81 million. Remember, Gross filed the original $200 million lawsuit back in 2015, and his dismissal from PIMCO was indeed a breach of contract. Meantime, investigators are on the scene of an Amtrak derailment outside of Chicago's Union Station. No injuries have been reported. And the investigation is widening into last week's terror attack in London. UK police say there is no evidence the attacker discussed his plans with anyone else or any other group.
We've got a very busy 2 hours ahead, and we kick things off in Washington, where the Trump administration is trying to turn the page following last week's failure of the health care bill. Let's get straight to CNBC's Amy Galbraith in Washington with the very latest. Hi, Amy.
Yeah, hi, Melissa. This is day one, the first working day after the president's failure on health care. This is the White House that very much is looking for ways to move forward here in the wake of Obamacare, put some points on the board, score some big wins here. We saw the president earlier today meeting with small business women in the Oval Office here in the White House. So this was sort of a scripted moment here. No major news. He didn't answer the tourist questions today. We're expecting within about a half an hour now Sean Spicer's press briefing, and there are a whole host of questions facing this White House now, including just how tax reform and the rollout there will be different than what we saw on healthcare. That's a question I asked Sean Spicer on Friday. He didn't want to go there yet. We'll see if he can offer some insights today, because that is the next big agenda item here at the White House. Also, does the White House have a handle on these competing factions up on Capitol Hill? Some of the same problems that bedeviled them in terms of healthcare will be up there on Capitol Hill for tax reform. Does the White House have a good sense now of the lay of the land of all those factions? And then what will Jared Kushner focus on his new role on government innovation? It's a new title that's been given to the president's son-in-law here at the White House. He's going to be working, we know, with executives from Apple, Salesforce, and other companies. But what are they going to focus on? What sort of regulatory relief ideas, streamline government innovation could we expect to see from that effort, if any? There's been a lot of efforts to reform government over the years, not a whole lot of success on that front in the past.
Other plans now, Eamon, within a potential tax plan that looks weakened now that healthcare has not managed to pass. For instance, the Ryan Brady BAT?
Sure, I think that Paul Ryan was definitely damaged by the failure of healthcare reform. The White House put a lot on his shoulders. They expected them to lead them to victory. He wasn't able to do it. They're going to be a lot more skeptical here at this White House now of the BAT, now that that's Paul Ryan's favorite solution to tax reform. Somehow, though, they've got to generate some revenue and among all these tax cuts because they're conservative on Capitol Hill. He will not want to blow a massive hole in the deficit with a tax cut bill. They're signaling now they're willing to have some deficit additions here, but still, they get the rules and talk about big deficit numbers. There's going to be a need there for revenue somewhere. That's Paul Ryan's solution. Will that work out is another question altogether.
All right, Amy, thank you. Amy Gathers at the White House. So investors start worrying that the Trump agenda and the Trump trade is in jeopardy. Let's bring in Trevor Hanger, Managing Director of Height Securities. Trevor, great to have you with us. What caught my eye in the notes, though, second producer handed us, is that the odds are increased that some sort of tax reform will, in fact, pass. And I imagine that those odds increase in your view since the failure of the health care bill. Why is that?
Well, I think there's a little desperation within the Trump White House and the GOP in general to get a win. I think there's the question to be answered about timing and about how they roll this out. But I do think in the end, you'll see more compromise within warring factions within the GOP in order to get something done. They didn't treat the ACA with quite the must-pass urgency that I think we expected them to. But I would expect to see more of that attack.
Do you think that the tax reform becomes much weaker than maybe the markets had anticipated because of that desperation?
I think it certainly could. There's some issues, obviously, with not getting healthcare reform done earlier. It makes the tax reform agenda a tougher one to meet from a big tax rate standpoint. Obviously, the Ronald Reagan tax plan really shoots the moon, and it asks a lot of Republican senators in the United States, I think, with respect to the BAT and other things. But I think the most important aspect of this is timing. I think the markets have had an irrational optimism around timing in getting healthcare reform done and getting tax reform done. I think that's the new standard. I think that's what you're seeing over the last week.
And it seems like Trevor, tax reform is a big shiny object on the other side of the river. But until we cross that river, we've got to get over the bridge known as the possible government shutdown. Do you believe that the government will be shut down? Because once again, Congress cannot come to any bipartisan resolution about the budget.
Well, I certainly think the odds have increased. I think a lot of folks who might not have had as much leverage in this debate pre-ACA failure have more leverage now. I do think that Republicans are going to treat this as something that can't let happen from a shutdown perspective. I think Speaker Ryan and Mitch McConnell are not going to let that happen. I think they'll find a way to get it done. We've seen in the past that the Freedom Caucus has been a thorn in their side, and they've been able to turn to Republican ministers have been able to turn to Democrats to get some votes. I think they're going to probably have to try and do that this time around too. But I think at the end of the day, Republican leadership knows that a shutdown will be on their shoulders, and they're not going to let that happen.
And you know what, Trevor, you said it there about Democrats, because there were some suggestions made on the Sunday news programs by Trump people that maybe the president will start to work with Democrats on health care. If the Republicans aren't going to get him what he wants, that seemed like a great shot across the bow. And also, to me,
Yeah, fuck yeah. Yeah, you should.
Trump's not really Republican, right? He's not necessarily a party member. Do you think that we are going to see, because of the failure of the repeal, maybe a little more bipartisanship? Give us a reason to hope, Trevor.
I think you're going to get some outreach from the White House on that. I'm not sure the Democrats are willing to give the White House much of a win at this point. If you're talking about a place where where Democrats and the Trump White House may come into alignment, I think you're looking a little bit further down the field, maybe at a drug pricing discussion on predatory authorization in the fall. I think with respect to tax reform, with respect to some of these big issues, between now and then, I'm not sure you're going to see a ton of sort of outward support of the Trump White House and Democrats. We'll see what happens with the Gorsuch nomination. That shapes up to be a pretty interesting fight. I do think Democrats feel like they've got some cards to play around the desk here.
You can't watch out the guys are trying to find a little sunshine on a rainy Monday, Trevor. Appreciate that, Trevor Hanger. Thank you. High Analytics. Great, Trevor. All right, since the election, the Dow is up 12%. You know that. But did you know that if the Dow closes down today, it will be the 8th straight down day for the Dow? That would be the longest down streak in only 6 years. Pretty Andrews, senior portfolio manager at Morgan Stanley Investment Management, and Brian Levitt, senior investment strategist with Oppenheimer. Brian, it's interesting
deceleration in the Dow. It's 2% down and you get 10% down. Yeah, no, I don't think it's a good chance to blame the media though. I don't think we should be overreacting to it. I mean, you asked about the Dow. I would say with the S&P 500, there's a greater than 5% correction in every single year over the last 30-something years, I think with the exception of 1995. So corrections happen. I think what's surprising is that everybody's reacting as if we didn't know that the realities of government.
Good afternoon, ladies and gentlemen. It's we have 10 minutes left on this real-time video cast. This video cast alone is worth a serious amount of money for traders who truly are a little bit focused. I'm not looking to make a PhD out of my members and free trial subscribers. I just wanted them to be stopped in sheep. The United States of America was not born on fear. And this is what you're seeing. This simple move alone is worth $1 to $4.70. Right now, $4.90 on the Monday. That's today. 2340 calls. End of story. What more do you all need?
Absolutely. I think moving healthcare to a side is actually good for reform. I agree with your previous speaker. So I think that's good. But again, Brian reported that it's only down 2% like that. I mean, could the market have a further pullback? I think it's very, very possible. But what we're forgetting here is what happens in 2 weeks. We're going to have earnings season, and I think it's going to be pretty good. So there's no better setup than a little weakness in the market going into earnings season because expectations are lower. That's actually pretty good. So might be near-term weakness, but I think we're setting up for a pretty good April.
So, am I reading between the lines correctly? Are you saying the buy this small dip, the dip that you both say is pretty negligible?
Yeah, no, I think the market can weaken further. I just don't think down 2 after such a strong move is the bottom. We could see another 2.5% pullback. But ultimately, I think the story is not about what's going on in Washington. The story is about an earnings recovery and good economic data. And I think you're going to see that. You're going to hear more confidence coming out of companies when they start to report in April. And I think the market's going to like that, especially if the market's weak going into that.
Yeah, I mean, let's not forget 9 of the 11 S&P sectors, Brian, have had earnings revisions upwards over the last couple of months. I hope that earnings still matter. So leave our audience with you to give us a little bit of actionable advice. If we get a downturn of a couple of percent, what would you do with it? Should we buy protection right now? People, they've made a lot of money in the market. So come on, and take some profits. What should our viewers do? Well, obviously, it depends on your time horizon. I think for most investors, they want to stick to a consistent plan. So secular bull markets, which I believe we are in, are not going to end with a Fed that's generally accommodative, most people not participating, and the U.S. economy doing okay. I think the reality is the composition of returns have changed somewhat in that everybody thought it was a value trade. I think we're still in growth in a slow growth world. And I would also advise investors to look overseas. If you look at Europe, if you look at the emerging markets, expectations were not as high as they are in the United States. Valuations were lower. And cyclically, they're in better parts of the cycle than the United States, which is a little bit further along.
All right, got that. Thank you, Andrew and Brian.
Thank you.
Some news alert in the bond market right now. Here, notes up for auction. That's what we see here. For what's the name look like? That's it. I'm Marissa, and $26 billion worth of 2-year notes went off the board, and the yield came in at 1.261%. That basically was about 1 basis point below its 1 p.m. offering rate. The bid-to-cover ratio was a little bit stronger than it has been in the past, 2.73 to 1. The 10-year average is 2.69 to 1. And indirect participation was higher as well, 53.6%. Direct participation, 10.8%. Melissa, back to you. All right, so thank you. For lending, apparently they don't fly at United, at least not if you're part of the Pass Rider program. The story that is having a Twitter backlash and a big headache for the airline ahead. And the Trump trade unwinds, but where is it hurting the most? We'll tell you. But first, the bank's getting beaten up a bit in today's trade. Take a look what's behind the downturn.
You're watching Tommy Show, Caruso Lee, Michelle Caruso Cabello, Ron Sullivan, and Simon Ruppert.
Sponsored by Info. QuickBooks introduces Rodney and his new business. He teaches lessons to Stanley, and that's kind of it. So Rodney needs just what to do. He got QuickBooks. It organizes all his accounts, so he knows where he stands in an instant. That's a profit, which gave him the idea to spend a little cash on some brilliant marketing. Ha! Clever. Wow, look at all these new students. Way to grow, Rodney. Know where you stand instantly. Visit QuickBooks.com. With eTrade's powerful trading tools right at your fingertips, you have access to in-depth analysis, level 2 data, and a team of experienced traders ready to help you do leading. It's like having the power of a trading floor wherever you are. It's your trade. eTrade. Start trading today at eTrade. The job opportunity of a lifetime.
Do you think that you're the best person?
I am.
Then ask about
Have a $1 million contract and equity stake in Marcus Lemonis's empire.
Remember that you're in a competition tomorrow.
How many different species do you have? All the right questions?
You're out of time.
Today, feels like non-stop fire.
Will it be
Can you see financial statement report?
the partner for your listening tomorrow at 10 and catch up on the van? CNBC, get yours. Spring is on, so it's time to get started. First things first, Post America's #1 professional lawn care. Millions of homeowners like you trust us to give them a lawn.
Ladies and gentlemen, Real Estate Trading Frank, we have 3 minutes left for this video. It's a 25-minute real-time video cast, and I don't know where you can get the stuff. Definitely get it here at Real Estate Trading. So there's a minor profit-taking here, which the internals are suggesting it's just going to be profit-taking, not a complete rejection of the move. Right there. That's a lower gap fill. The upper gap fill is up here at 23.42. So the bottom line is you do expect to see a little bit of profit taking. We're up 390% on the intraday lotto, so why wouldn't you take profits? I mean, come on, let's not be stupid. So at this point, it looks like this level here is the 22.1738 on the E-minis, roughly about 23, 23.22 on the, because remember, the difference between the E-minis and the SPX is roughly about 5 to 6 points. So 23.17 correlates with 22.25 on the SPX. Just add 5, like roughly 5 points to the E-minis. Looks to be a definitive tradable bottom. Now, a tradable bottom line means that it's tradable. It doesn't mean that's indefinite. It doesn't mean we're not going to go lower. It doesn't mean we're not going to test 2300, which I've explained in my video cast is a very strong probability based on the swing charts. But at least at this point, these tradable bounces keep you very happy, put more money into your trading book, and more confidence, and you do better in the remainder of the trades. So as you can see, we have a minor reversal hammer shaping up right here, right? Doesn't matter what individual stocks are doing. Individual stocks have their own beta and their own momentum to do what they need to do. But this is a reversal hammer, and do not be surprised if we come down and test maybe 23.55. I'm sorry, 23.35 again, because that is a reversal hammer forming. And as this video ends in about 60 seconds, you're going to see that this might turn red. End of story. Sign up for the ACS coaching sessions. Do what's right. All I'm trying to do is help. That's all.